Hello traders, Jason here with SwingHigh.com. It is still Monday, December 7th, 2009. This is your post-market analysis. I'm sorry for not posting your halftime report. I made the video and then had some technical issues with the website. So I will post the video in this post if you care to see it, and take a look at that. Basically, in the halftime report, I called for a pretty much sideways consolidation day, and it looks like that's what we got. The market's barely moved. So here we go. This is your the SPY 15-minute chart, which is the S&P 500 tracking ETF. Basically, we had a flat to neutral-ish open. Had a little bit of a run-up, not much. Tested the 111.50 mark as support. Did that twice in the day. Sort of made a double top here, actually. And then broke down under that double top. And then now that neckline, if you will, or the confirmation line of the double top is sort of acting as resistance on the way back up. So we put in a double top, broke down, and then tested away the 110.70 mark as support. I mean, it's not completely gone, but we tested that support area, came back above it, and closed pretty much just above that support line on SPY. Now this may look sort of dramatic, but it is a 15-minute chart, so we'll zoom out to the daily time frame just to give you context. We are still holding up in this high base. As long as we hold up above 110, I'm going to be more comfortable with the bear case going forward. I would like to see continued consolidation going forward from here, though. And it wouldn't hurt if the consolidation was a little neater as well. All this gapping action isn't the cleanest consolidation I've ever seen, so it's hard to want to call that a good pattern. Anyway, SPY down 0.15%, the diamonds, which is the Dow ETF, up 0.06%, the NASDAQ, this is the Qs, which is the NASDAQ tracking ETF, is down 0.5%, so some real relative weakness there. The Russells, IWM, up 0.15%, and the financials down hard, down 1.6%. And we broke through this support line that I had drawn in here. Not sure from where that was. Most of my analysis is on SPY. Probably comes from the daily chart. Yep. Alright, well, that was a slight support area, not the strongest one that we broke through. Next one comes up at 14, and then some significant ones at 1350 through 75 area. Anyway, so the NASDAQ and the financials showed some real relative weakness today compared to the S&P, which is a little bit ominous considering those are leading indexes, but it's not the end of the world. One day doesn't make a trend. So we'll have to see if that continues and go from there. Gold finished down 0.57%, and the dollar flat. No move in the dollar. It was up pretty big this morning, but then pulled back and finished completely flat. Let's take a look at the market internals. The tick, predominantly bullish today because most of the prints are above zero. Positive prints means that stocks were rising, and negative ones means stocks are declining. The TRIN between 1.2 and 1.4 or 1.5, that is definitely in the bearish range today. More volume was flowing into stocks on the decline than on the rise, and the VIX popped 4.4%, so a nice pop in the VIX today. It was bleeding out and then reversed halfway through the day. That's the fear indicator going up. Sorry for the simple explanations, but I'll elaborate more in the future. Thanks for being a part of SwingHigh.com.